All right. Trying to go live. I put it live on Facebook as well, which I have like a grand total of 3 followers. I'm not really sure if it's working there, but in any event, for those of you that have stuck with me through all of these technical difficulties this morning, thank you. Yeah, just like the markets, having some hiccups. And as I was saying before my connection got lost, this is actually a historical moment because Bitcoin has not really been through a downturn. The S&P, the markets generally have gone up, and this is a function of many things: the dollar, the U.S. military prowess, and the U.S. basically haven't written the rules of the game for the last 80 years. And generally, I said this, I always say this, not always, okay? Don't, what about me on Iraq? But generally follows the rules that they wrote, which is somewhat, unique. Okay? So this is all being undone right now. This is clear. I think the shoe has yet to drop, and I hope it doesn't drop for America's military alliances and partners. As you all know, I'm in the wild, wild east here in Eastern Europe, and Ukrainians are fighting for us. So I'm going to go through a couple things with trade. We're going to talk about the markets as well. Like I have been trying to write on this. You've probably seen the title come up on YouTube a couple times now. Seems like I'm a trade analyst now or a market analyst following these. Normally stocks, bonds, they go up, they go down. We have a trend. It's not that interesting, right? But this is a generational type of a move. And it's weird because it seems that if Trump changes his mind, as there were rumors yesterday that there would be a pause on the tariffs, the S&P spiked. And then, of course, it was just a rumor. So the S&P went down again. So let's take a look at the situation here. All right, this is the balance again. Remember, we talked about this a lot. The balance is a component of GDP, but it's usually a smaller component. It's a very small component of United States total GDP, a couple percent. Okay, but what the Trump team has gone through, and I've organized this by trade balance. This is just a selected group of nations. Okay, and this is in billions. So with China, it was the biggest deficit. China, as Trump likes to say, $300 billion deficit. These are 2024 figures, except for a couple. I will point out what it happens when it's 2023. Thank you, Yao. We will do a Mar-a-Lago Accord analysis soon. If it's anything like his trade policy, then why don't we just expect the dollar to go down more, which will be good for Bitcoin. But as we've talked about, the simple thing that they did, which is not a tariff rate, just if you're still not clear, is there's imports and exports, which is a component of GDP, but the component is the net, which is the black. Okay, so, and this is from the United States' perspective. So it is true that the GDP does fall by these amounts. Okay, that is the black numbers: 300 billion. European Union, 236 billion. Okay, 300 billion for China. But again, in the GDP calculation, it's nearly $30 trillion for America. Okay, so you're talking a very, very small percentage. And all that we can, again, this is nobody's profit or loss statement. It's just all we can say is these countries would rather take dollars than other goods from America. We would rather take their goods and give them our dollars. And that's the privileged position that the United States has been in for the last 80 years. And you can see here that the European Union, if you look at total trade, is bigger than China. All right, because we have $600 billion of imports from the European Union. China, only $440 billion. Nonetheless, to come up with this, and also we got Canada here, which is still quite a bit smaller than the ones than the top three, but bigger than the few nations ahead of it: Japan, Vietnam, Korea, at $400 billion imports. All right. So what the Trump team decided to do using ChatGPT was to just get a list of this stuff, including the Penguin Islands, and find a reciprocal tariff, which they called, and that's this. Okay. So this was their reciprocal number, and of course they divided this by 2. All right. So with China, it was negative 67% divided by 2. There's your 34% tariff on China, European Union 20%, and on we go. Okay. This was their idea on how to make a reciprocal number. Now, just to remind you, okay, I want to go through a few things here. All right. But just to remind you, this was 2024, the U.S. trade weighted average tariff was around 2.2%. Okay. And our Google, I don't think it's called Gemini anymore, whatever, Google AI says this is expected to increase significantly, potentially reaching 10% or higher, depending on specific goods and countries involved. Actually, that's funny. I just searched earlier. It's hallucinating. I was getting even higher figures. I mean, this thing could go well higher than 10%. Okay, they're saying that their target is that. Because again, what is the global trade balance for the United States? It's negative 22%. So it would make sense if they would divide that by 2, they would target the negative 11% or 11% to. Again, it's not even correct math. You would do the full percentage if you thought that this would take away the balance. So if you thought that they could just pay to take away the balance, then your tariff would be 67%. But they didn't do that. They just divided it by 2 because, whatever, 2 sides. It doesn't make any sense, whatever their little formulas are. It's not the actual tariff rate. Okay, so just understand it's not the actual tariff rate. Then we have these countries here, and I added a couple more, including Ukraine and Belarus, because here's Belarus. It's a 2023 number. All these are 2024 levels except for Ukraine and Belarus. I got the 2023 figures. I couldn't handily find the other ones, but Belarus has a trade balance which rounds to 0 billion, right, a couple hundred million, to the negative 68% divided by the imports. And then from this point on, with Saudi Arabia and then these countries here, it's a positive trade balance. Okay, so it's a trade surplus. So whatever the exports are, which are not shown here, they're higher than the imports, which are green. And look at the interesting spikes here. Hong Kong, Hong Kong, and Ukraine. Both countries which Trump is, penalizing. Now, Russia and Belarus have the United States has a trade deficit with them for the United States perspective. Ukraine, the United States has a trade surplus over 3 times. Okay. Over 3 to 1. And it's going to be even more in 2024, I'm sure. The United States exports to Ukraine more than they import. Yet, so that's a good thing. From the Trump perspective, that's a good thing. Yet, Trump slapped the 10% tariff on Ukraine, a country that continues to be bombed every night by Iranian drones, and there's North Korean soldiers hanging out in Chinese kit. So it's very odd, again, that he wants to hold his enemies closer. But when you look at Belarus and you look at, where's Russia? Somewhere here. Where am I? Yeah. 82% Trump reciprocal tariff. It should have been at least 40% based on the Trump math of the tariff to slap on Russia. They decided to put a 0% tariff on Russia and a 0% tariff on Belarus. There is a small deficit with North Korea. We just export to North Korea. We don't, I guess there's a surplus to North Korea. We just export. We don't import. So that's good. But, we just basically give them bombs, give them food, not to bomb us. That's the idea. So it's kind of odd. And these are huge numbers, all right? Huge numbers. When it's all said and done, we saw the 50% extra reciprocal tariff on the reciprocation, which Trump threatened yesterday to China. We're looking at something as well in excess of 10%. I'm going to reset this. I feel like this just reset live. That's hilarious. Look at that. Did you just see that was 10%? 10% baseline. Now it's 48.4%. This is hallucination. It's relying on AI for you. I'm very technical market analyst here. From 3.8% to 48.4%. Everybody knows this is insane. Every normal, rational person knows this is insane, but they're doing this juggling act of, okay, this is just a negotiating tool versus what he says, and the admin, the yes men, the sycophants, they say this is permanent. This is what we have to do to reset trade. So the markets still don't know, is this a negotiation juggling tactic, or is this a permanent thing? And Trump, in his infinite wisdom, said it could be both. So no one really knows. Trump, the man of certainty. These are the more tariffs for the crazy countries. Again, Lesotho got 50%. China's here at our 34%. Taiwan, 32%. It's all here. It has nothing to do with the actual tariffs. It's just Trump thinks that this is real money that should be going into his pockets or the admin's pockets, and he can pay down the national debt with this amount. Which again, there is no guarantee, because a tariff is a tax, and if you tax something, you're going to get less of it. Okay, so if you tax imports, you will get less imports, which we may need for our outputs in GDP. And if you subsidize something, you're going to get more of it. Okay, so subsidize unemployment, you'll get more unemployment. That's the basic rule of thumb. And I really am at a loss to wonder how this is even a good negotiating tactic, other than just to turn away your friends and allies. Again, the United States has a huge surplus with Ukraine, but Ukraine still got the 10% tariff. Russia, Belarus, which we have huge deficits, some of the biggest trade deficits with Russia and Belarus, 0% tariff. Infinite wisdom from these guys. Taiwan. Where's Taiwan? Here we are. Taiwan has a pretty big deficit in Trump's eyes. Okay, 64%. That's not even the real. That's not even that's one way to calculate the deficit, by the way. You don't have to divide that number by the imports to get, to say that this is definitely the trade deficit percentage, let alone the reciprocal tariff amount. But that's what they say. So Taiwan has taken the friendly approach, saying that we'll just go to zero on our tariffs. Please be good to us. European Union, surprisingly, did that as a whole, but they were, of course, much stronger. They said, let's talk, let's go to zero. That's what Elon Musk said. But then, of course, they said, we will be strong if you're not going to do that. I have huge doubts that Trump would just go to zero with the European Union, who he thinks are the most evil people in the world. Not China, not Russia. I heard Rahm Emanuel on The Daily Show, the best place for political news these days, with Jon Stewart. And he made the point, which is very true. He's former ambassador to Japan. He knows East Asian politics quite well at this point. Just finished his stint as ambassador to Japan. And he said, China has indeed been angering the world with their trade policies, shutting down factories all over the world by undercutting them and doing tough deals of their own, to use a Trump term. And Trump has basically just thrown all of that goodwill out the window by offending the entire rest of the world by putting a minimum 10% tariff on the rest of the world. Of course, we have exceptions there, not Russia, not Belarus. Very important to point that out. And let's keep that 10% tariff on Ukrainians. So I said this a couple days ago. The credibility will run out if the U.S. is trying to redo this system. This really is a historic change in rules of the game that, yes, it's absolutely true the United States wrote the rules, but it's also true that the United States played by the rules. Sure, the United States is going to win from having the dollar, being able to print money, being able to cover up deficits, not trade deficits, but fiscal deficits. It's absolutely true. And don't what about me with Iraq? I know the United States is far from perfect, but there's no other way to read this other than power politics. Yes, we return to the law of the jungle, as Geo says. I think that's very true. That's what he's trying to do. That's what he's trying to do, but he's running out of credibility as he goes on. I mean, if this gets too much for him, and it's just hilarious that all the CEOs now are finally, like they didn't see this madness coming because Trump was talking about tariffs for so long. And obviously they don't care about the national security stuff or any of the other stuff. They're happy that DEI is gone. I'm not a huge DEI guy, but everybody deserves to be happy. It's possible that Trump could, completely do 180s on all this and pause them for 90 more days or whatever if the markets continue to get really, really bad. But the credibility will run out. And I'm not sure anybody has actually understood that until this moment. All right, this is, if they want a new rule-based order, a different kind of rules-based order, one where China can just do what they want with minorities, send them to re-education camps. Trump can just ignore the murderous moves of Belarus and Russia, then we might get that. And the weird thing is the rest of the world is even overlooking now the bad things that China was doing. We saw South Korea and Japan showing that they want to cooperate with China in light of the U.S. enforcement. So it's very, very different. We are young, he is old, yes. So from a market perspective, this is very much, when I was starting my stock trading days in the early 2000s, literally right after the global financial crisis. I remember driving to my internship and listening to stock guys on talk radio saying how this was a generational opportunity. We have that now, but this is also such a wild change. I'll say this is more probable than not that markets are going to continue to fall, and this is just going to be a different world. I don't see him sort of reverting to the mean here. He's so egotistical that he wants to do it, and he thinks he can do it. He thinks he has the power. But just look at all these markets. This is a monthly view. Nifty 50 is the best. Indian markets, thinly traded as they are. Now, I noticed I didn't do this in prior days, and I should do this, is let's start looking at harder assets compared to these stock markets. Okay, so these are major world markets. The worst is the Nikkei, down 15%. And the nice thing about these percentages is we are ignoring, to some extent, dollar inputs here. These are all in their native currencies, so think of that. All right, so these are all, the Nifty's in rupees, S&P's obviously in dollars, but the FTSE's in pounds, sterling, the DAX and the CAC are in euros, Nikkei's in yen, and the Russian market is in rubles as well. So that's the helpful thing about stock markets. But we still have this dollar impact, and what's a good way to see how that changes the picture? Well, let's just look at hard assets like gold and like Bitcoin now. Okay, so this is a month. Obviously, in a day, yeah, I think this chart reset because of. So we're just gonna have to look at a month. Asian markets, I guess, are slightly recovering at the moment from the bloodbath they had yesterday. But again, I normally wouldn't look at these at all. Normally, you guys know I'm looking at trends, like looking at the long-term picture. But we are in the midst of some big changes. So let's see how Bitcoin and gold did in the last month. Let's put gold first. All right, gold is this purple line. It's the best, up at 1.68%. And let's look at Bitcoin, down. Okay, down with the rest of the stock markets. Okay, so that's interesting. Correlated. Let's go back 3 months and see the picture. Gold's still top. Remember, gold has had a breakout year, one of the best years ever, including last year into this year, the best time for gold ever. All-time high is $3,000 an ounce. Bitcoin out 3 months now, because we're going back to $100,000 Bitcoin, down 20%. Let's go back a year. Nikkei is still terrible. I know we got a lot of stocks here. If I can clean this up, let's take off the CAC. Let's leave the DAX. So the Germans are here. Yeah, I have no thoughts on if the markets are up or down today. Like, again, Trump could say something like it's a pause and they would shoot up. But this is such a, in my mind, he's making a move to do this sort of imperial shift. That's what he wants to do. So it's more probable than not that it's going to be choppy and difficult. And that's sort of how I feel about this. The China ultimatums. Let me know, Gio. What is the latest there? What time zone are you talking about? 12 o'clock? Because it's past 12 o'clock actually where I am. All right, so here we go. I just want to show you Bitcoin. Normally I don't do these charts, but we got gold here up over a year. Let's go back 5 years now. Obviously Bitcoin destroys. So take some time, but this is really what I wanted to point out, which is just an incredible, it should give you incredible comfort during this time. And there was just no asset. Like, I got into gold back 20 years ago, 25 years ago now, because people were, and it was just increasing 100% per year in the early 2000s because it bottomed out around $200 an ounce. And it seemed like the only safe haven play during what seemed like a lot of money printing at the time. This was even before the global financial crisis. The fact that we have this asset now that can protect against the dollar is very, very interesting. So if we take it back, you gotta sort of set it and forget it. You can't really see it in the noise of a year. And I think this is a very interesting way to look at it, right? Gold looks pretty good, but remember, gold would not look that good if we went back 5 or 10 years. Gold is the best looking asset here over the past year. And all of the other stocks are mostly around their all-time highs somewhere on this chart. All right, but then you put that back 5 years, and then Bitcoin just dwarfs them. So this is like the best, this is just the best medicine for any of this. And the stock markets can lose $10 trillion in value over the past couple days, past week. Bitcoin is a $2 trillion asset less now, okay? Because it's also getting hammered a little bit. Hammered is maybe a strong word, but it's just a completely uncorrelated different asset over the long term. Yeah, I'm not sure about the latest. I know about his 50% extra tariff, but is it tomorrow, 12 o'clock Eastern? It's probably 12 o'clock Eastern. which, yeah, I mean, that's already going to be like midnight paging time. I guess he wants him to stay up late and come down to the wire. If it was true that all Trump cared about was China, uh, there's just so many different ways to skin a cat. But if you're going to take this broad-based global approach, and I don't have the Penguin Islands here, the McDonald and Hurd Islands, you're just continuing to poison the well. And I do think it's very, very funny that the Republicans are saying, we just gotta tighten the belt a little bit. It's gonna get worse before it gets better. There are more than one way. There certainly is more than one way to skin a cat. But if you want to think about perhaps the worst way to turn the entire world against you, this seems like it. John Mersheimer is right. It is anarchy in the global sphere. It is anarchy. China doesn't have to follow this tariff, or they can reciprocate any way they want. So this sort of game of chicken, the U.S. is losing credibility by the day, and I would say probabilistically, Trump is just I bet on Trump's ego and Trump's again. I don't bet on the markets. The markets could go up like tomorrow if he pauses all of them because he said China got what they wanted. But how much of a fool do we all look like for letting this man negotiate on our behalf? So yeah, I feel the same way about military spend. By the way, we're the ones that spend the most, and we haven't gotten the assurances from the Trump administration that they would support us. Here's another one. I heard Scott Galloway made this mention, and so I think it's good to actually talk about this. This is a rolling PE ratio for the stock market, for the S&P 500. Case-Shiller index. Well, their index, that's the property, I guess, but this is also done by Shiller. So you can see that the values are roughly 15, all right, 10 to 15. Could be under, could be over 15. But on a rolling basis, this is price to earnings. Remember, I have the price to sales for Bitcoin. This is price to earnings. So this is after expenses. It's the entire stock market, all right? And generally, high is overvalued. All right, this was in May 2009. And this is, again, the stock market was actually already bottoming out, but it's based on, and this is a shorter termer. This is, if I showed you a trailing 12 months, this would probably be, this would definitely be a little bit lower. But this is a very I don't know if it's 3 months or 1 month price to earnings. But in any event, it's showing that the stock price is way higher than companies are making, okay, on balance. And that topped out here in May of 09, even though the markets themselves, like I said, bottomed in March of 09. So it's kind of a lagging indicator based on these numbers. The point is, if we got in December of 2020, as COVID was kicking in, we got to 40. Then we went all the way down to 20. Now we're back up again to 30, and now we're going down to 25. I don't think something like this would completely blow out, but Scott was making the point that if you look at a Latin American economy, or certainly some Southeast Asian economy, the companies, if you can buy manufacturing, real companies with real cash flows and real exports, you still have geopolitical risk. And that is a fact. That's why you can find a lot of these companies that might even seem like they have better cash flows than American companies, but the multiple there would be way lower in other economies, meaning it's not going to be 25, it might be 10, it might be 5. He said something like ByteDance is even 3, which is crazy, crazy low. The multiple is very fickle. He said this phrase, it's absolutely true. It's just like the inverse of a cap rate. You can't outrun it. If the market, you can only find this data from the market. It's just what the market demands. Okay, so the stock price or the stock market cap divided by the total earnings or the earnings per share. It's a very, you can see here, it's a very fickle number. It can go up and go down. You can have averages, generally 10, generally 15. The idea would be if you want to make money, you buy low and sell high, even with this chart. Okay, so if you can buy at a 5 multiple, all right, where theoretically that means it only will take 5 years for your earnings to pay back the value of your stock, and then sell it to someone who accepts a 20 multiple, you're golden. I mean, you're making a lot of money, and people try to swing trade this stuff and whatever. Again, I'm not a trader, but I do agree with the premise that he said is that this could go way down for America. I don't think it's going to go like blow out to 2 or 3. I still think that if we look at the broad swath of the world, America has the rule of law. America has private property rights. And Trump's trying to change all that. He wants to invest in Russia. He has no idea that Russia has no property rights. They're going to take his stuff. He has no idea of these things. But that's what he wants to do. He wants to get more of a stake in Russia, more of a stake in China. He's got his shitcoin where he could easily take cash from any of these leaders for any of his trade deals. And not going to say no one would know, but at least he could have plausible deniability. And by the way, have you noticed that when he has a problem or he doesn't understand something that's politically not so correct, he just says, I don't know, never heard about it. So we'll get a lot of that as this sort of route continues. But we were not nearly in an over-leveraged situation as we were in 2008, the global financial crisis. Look at that. We were only at, we were over-levered historically. Remember, historical levels 10, 15x PE. 30x is not, it's double the average, let's say. It was not at all like this. So this is totally self-inflicted. It's totally self-inflicted, which is why, to hedge, we'd say, yes, it's possible that Trump could turn it all around tomorrow and say it's all paused. Something tells me that it's more probable, though, he's going to go for the full flush out. He's going to use his ego. He's going to use the military. He's got a lot of wars to deal with right now. The markets are uncertain with all those wars. Obviously, Iran is a big issue. He's threatened Iran. And markets don't like uncertainty. So if I had to bet, and I don't bet, I hold Bitcoin, not financial advice. But I would say that you bet on the chaos with Trump. You bet on the ego to take this stuff down much further than if really all his deal is just to figure out a better deal with China or Europe. That's not the strategy that you take to do it, just blowing out the world relationships. Geo says the direct talks with Iran are announced. Does that mean that he is holding off on his bombing of the nuclear facilities there? Because that was the threat, I guess, yesterday. It's good if they took it. I haven't checked that. Again, news just moves too fast for me, guys. You guys are checking all the news quicker than me, but try to back it up. I'll try to back it up with numbers here. We'll talk about Bitcoin in a second more. So here is oil. This is a very opaque market. This is Russian oil in Primorsk. This is coming out of in the Baltic, out of St. Petersburg. This is lower than world markets. Brent right now is 64. This is getting close to 50. And I don't have this minute by minute, unfortunately. I don't know why Bloomberg doesn't even have this. This is a very opaque market, though. Okay, we got the Russian shadow fleet. And my wife listens to a former deputy energy minister from Putin from 25 years ago. His name is Vladimir Milov. He lives in exile, as most smart people of Russia live in exile. And he thinks that if this gets down to 50 and stays at around 50, then it will really hurt the Russian budget. You know, you're talking about $200 billion a year budget for Russia in oil and gas. Like that affects their budget to the tune of something like $200 billion a year. And if it goes down to 50, that could cut it by 50 billion. And again, that's also about the same number as they need for the military. It's at least going to be 100 billion in military spend. They hide it as well. It could be 150 billion. But this is at least a good sign. And this is interesting because I didn't pull this chart up. Let me go back to the stock market on just Russia. How far does this go back if I do all? Yeah, it doesn't make any sense. Let me pull down just Russia, because we in the Baltics always cautious of whatever Russia says. Putin was really getting angry at Bush about here. The Munich Security Conference was in 2007. There was, on The Economist, there was big Soviet-looking pictures of Vladimir Putin saying Russia resurgent and all this stuff. And then they got destroyed. Their markets got completely destroyed in the global financial crisis, which was great. As an aggressive nation with no private property and it's at your border, it's good to see them get destroyed in global markets. And that gave everybody time, even though, you know, by here, he invaded Ukraine the first time and took Crimea. This is in rubles, all right? So you got to discount this against dollars. I need to show a dollar ruble, which I can show later. But anyway, this was you went from, why don't I see that number? This isn't the best, this is TradingView here, but went from something like a 1,500% increase all the way down to, 500% increase since the Soviet times. So obviously it was a huge loss. I mean, 2/3, something like that, as a lot of markets did. But this very much reminded them that they couldn't just do what they want. They were constrained by world markets. It's more choppy here. And there are massive amounts of sanctions from this point. But that's the thing, is Trump is letting off the gas of those sanctions. So that, of course, is scaring nations like mine that have to deal with Russia. It's about the carrot and the stick with Trump, and it's give the carrot to your enemies, the stick to your friends. The largest trading partner has somewhat proposed something like Taiwan taking a 0% free trade route. Again, something tells me that that's not actually going to happen. But the United States imports $600 billion worth of goods and services from the EU. So that's obviously a big one to watch out for. And this one, Canada, $400 billion coming in. Much smaller trade imbalance, trade deficit. $400 billion worth of goods coming in from Canada, and they are getting threatened up the wazoo. So this is far from over. This is the strategy. There's many ways to skin a cat, but he has decided to just go to the nuclear option. I just see I see that most of these markets are continue to go down. And so at least from the aggressive nations perspective, Russia and Belarus primarily, I think they're still in very difficult situation. Should I go back to 98? Yeah. So this is better than it is, right? Because these are in rubles and this is in rupees. So this is the one problem about looking at stock markets like this, because these are denominated in their own currencies. I should actually show, let's go to currencies. And let me, let's do dollar, franc. I'm not sure I have dollar ruble. Okay, that'll be good. Okay, so higher is worse for the local currency here. Again, I should do an inverse, but anyway. The ruble's fallen 15% in 5 years. But if you go back to Putin's beginning, it's much worse. So this is too much. I just want to show it to you see a base case like the Swiss franc. So look how, first of all, look since 1971. Well, let me take this off. This is actually good. Swiss franc is a great metric to compare the dollar. Since the gold standard collapsed, it's like the Matterhorn. Look at the Swiss franc's strength against the dollar weakness against the franc. This is the only, really one of the only currencies that that does this. Okay, if you look at the ruble, it's the complete opposite. Okay, ruble's getting weaker. When it goes up, it's getting weaker here. But you know, Putin again, this guy's supposed to be protecting his people. It started here at already roughly 1,000% weakness, and it goes to 3,000% weakness. So it got 3 times weaker in the course of 25 years for the dictator Putin. The U.S. was in a super strong position, except for the Swiss. Except for the Swiss, the U.S. was in a very, very strong position. Now this is the opposite. This is euro dollar. So in this case, this is bad. Sorry. So yeah, this is actually dollar weakness as well overall, because this is the opposite. Even though the ruble was going up, but this is euro dollar, so dollars on the back end of the pair. This is actually more like the Swissy as well, so it halved in value. But this is not, if you divide the one, this would be a 50% loss, as opposed to the Swiss franc overall this time, which lost 80%. Let's look at, okay, now this, again, it's the same. Pound is about the same as the dollar, lost 50%. In value. So the thanks, Gio. I do need some coffee. Do need some coffee today. I need to do a better currency. I'm trying to just do this on the fly. But the point is, the dollar other than a couple currencies, the dollar is very strong. A couple European currencies can compete with the dollar, and their gilts and boons and treasuries can compete with the United States Treasury. But by and large, what you're seeing with these markets is a self-inflicted wound, and I don't necessarily see that changing anytime soon. If we go to the monetary base and Bitcoin, so people, remember, this is what I've been tracking since 2018. Let's take this off. And this is why really we are going through historical times, because like making history times, because Bitcoin just was never really tested as far as the world markets go, but also presumably if things get bad, every nation's going to have to print money to deal with some of the economic turmoil to come, whether it's from tariffs or just in general. That's what central banks do, is they print, right? And the dollar generally, like I said, is the best looking horse in the glue factory. Not the case against the Swiss franc, but generally it is. And we got $7 trillion in the monetary base in 2009. Okay, it's all central bank money turned into dollar form. It went up to 30 trillion by COVID, peak COVID, and that was from a base of 20 in February 2020. So from 20 to 30, they put $10 trillion into central bank money, and a little bit more if you counted the Fed reverse repurchase facility, but that's not for banks. This is money for banks, all right, and for people, because it includes the paper tickets, paper currency, but this is the base money. And now they're trying to, bring it back down to the all-time trend, all right, and it's around 25 trillion, something like that. Okay, this is an estimated number. The last number for sure was here, 25.5 trillion roughly. Okay. So now with some currency exchanges and a couple extra data points, it's showing that it's going up. But we'll have to see when I get the final data. But this is an exponential curve. Okay, if I put this on log left, it would be a straight line. Okay. Yeah, I knew I was going to do that. Sorry. My software breaks sometimes when I do this. Let's do it here. Yeah. So if I drew a trend line through that, it would be a straight line. Okay, but more interestingly is to look at how the line works when you compare Bitcoin's market cap, with this value. All right, and as we can see, this is now on the right-hand axis, and this is a percentage. Bitcoin is not a straight line. All right, it has this sort of parabola. And from 2017, we did hit 1% of the global monetary base. Okay. That's $200 billion worth market cap. Okay, in 2017, and we fell back down, and we get back up again in the 2021 boom. So this did coincide with money printing. Okay, this one did, but now we're going up again. All right, and you better bet that if more money printing happens, then the Bitcoin value is going to go up even more. But it's not actually the main feature, if you ask me, because this purple line, the global monetary base, is an exponential curve. All right, you put it on log scale, it's a straight line. The green percentage of the Bitcoin market cap divided by this purple line has that parabola. It looks like this. It's a power curve. It's a power curve. right? And we can do all sorts of price extrapolations. We get to 100% in, after 2 more halvings from now. Okay, and again, that would be a monetary base of something like $80 trillion. Okay, so this is why I think this is how it's going to happen. I don't see hyper Bitcoinization. I don't see just, you're going to have authoritarians come into office, authoritarians leave office. You're going to have people printing money. You're going to have people putting capital controls on. All of it takes time. Still, most of the world doesn't know how to use Bitcoin, or even how to use Bitcoin in a native, proper way. This is how I see it growing. We can put bounds on this. And this is just, again, this is a percentage of Bitcoin's market cap divided by this monetary base number. Okay, so when we put these red lines, don't think that we're out. Don't look at the purple and think we're out of bounds. The red lines are on the percentages. Okay, but if we go out now to where we get to 100% on the trend, if we go to the extreme, 2 sigma, we could be 3x the trend, or 2 sigma down, which would be 20% of the trend. Okay, but the trend is around $80 trillion, and that, we are indeed getting close to that mythical $100 trillion figure. 2 more halvings from now. But this is all natural power growth. It's not exponential growth. It's a slightly decreasing trend, as I've said 1,000 times. So now you are seeing the growth of this trend is something like 45% per year, decreasing now to the end of this year to 42% per year. I have made those, Gio. Do you mean, so Gio asked of making a video exactly explaining how money printing works. I definitely have. It might have been mixed in with, the money supply or some other chart, but basically if you have this growth, so if you want to know just brass tacks how this works, why this grows, okay? It grows, this is the liability side of a central bank's balance sheet. It's the liability. What is on the asset side? A balance sheet has to equal. So what is on the asset side is when a central bank buys something with this printed money. So this literally is the printing press, okay? Nobody can draw a chart for you guys like I can here. No one has calculated this. There's no APIs from the IMF. You got to go through each central bank's balance sheet and add it all up. And you also have to convert it into dollars, which is weird because, some countries accrete in value, but most of the time they fall in value against the dollar. It's really just a few. Like I said, Switzerland accretes in value against the dollar. So this is the money print. This is the printing press, and it literally means printing out those presses, whether it's dollars, euros, yen. That's about 1/3 of the total. Okay, so if the monetary base is 26 trillion, it's about $9 trillion in actual physical cash. And the other is just a balance. It's a ledger entry. It's an account that the central bank has with each bank. That's what it is. So this is the base of the system. There's no further irreducible money than this. This is the base of the system. And then what asset does the central bank buy with this money? And when I say central bank, I mean collectively. These are all the central banks in the world, including the Federal Reserve, including the European Central Bank. They typically buy government bonds. So when governments go into debt, they sell bonds to the market, but they also will sell bonds to the central bank. And it's important to note that it's not 100%. It's not like whenever a government has a deficit, and a deficit is just they spend more than they tax, it's not like the central bank picks up all of the deficit. At certain times, it picks up a lot more than not, like it did here. All right, but the percentages globally, actually, I don't have the global figure, but it's going to be something like, It's going to be something like the US figure, actually. It's going to be something like 15%. So if you imagine that this money goes into the system, it's printed, how do they, what is, assets have to equal liabilities. So this is a liability for the central banks. It means they print it and then they do something with it to get it into the system. They buy assets. So they buy assets from the banks. That's also an important point. They don't buy those bonds from the governments. They buy them from banks. So that's how the money gets into the banks, and then the banks make further loans. That's how the whole money supply works. But the core of it is here. Some people think this is like a huge number. It's actually not. All right. So if global government debt is something like 200 trillion, it's more than that. I don't know, it's closer to 300 trillion, but let's just say whatever. Let's say 250 trillion. Then this represents 10% of all the debt that all the governments have allocated throughout history. And that's just how the system works. It's an exponential growth function. So what it means is when a government borrows money, they will first and foremost issue notes, bonds, bills. Those are just different durations of those instruments. They will issue those notes, bonds, and bills, and different entities in the market will buy. It could be some private people, which is a very small component. It could be some corporate pension funds, banks. That's the biggest component. It could be foreigners or even foreign central banks. All right, that's also a big component. And then it is the local central bank. So in the United States case, that's when the Federal Reserve holds treasuries. And the United States Federal Reserve's balance sheet at the moment is $6.7 trillion. So most of that is in bonds. They also hold some gold, but most of that is bonds. M2 is yes. Depends on what you mean by printing money. When I say this is the printing press and literally the printing press, I'm saying it because everybody thinks of the government as the printing press. But it is true that banks print money, and actually, this is one of my favorite quotes of all time in finance, is by this billionaire commodities trader. His name's Rick Rule. He says that no matter how good you think the government is at printing money, the free market can always do it better. That's true. So even though this is the total government printing press, $25 trillion, we have banks that issue balances to their customers. Right? That means the verb, I guess, is taking a deposit. That's how they say it. And banks only have the privilege to do it. Like I could in a free market set up a bank. I'm going to take deposits. You give me your money, I'll put it on deposit. I'll give you some interest, but it doesn't mean that I'm going to keep your money in the coffers in the vault. I'm actually going to lend it out. I'm going to use the law of large numbers and the law of averages to understand if you're going to come back and claim or not. And I'm going to only have a fraction on reserve. That's how fractional reserve banking works. But it's not a crime. It's not a criminal syndicate at all. But it can cause booms and busts, specifically if the central bank is involved. That's this. So that's why I always say that this is the core of the system. This is the biggest problem because these guys don't have market mechanisms. At least it's in a bank. Banks know their depositors. They know when people are going to want to take money out or they're going to want to put money in. They know the seasonality of things. Central banks are very dumb that way. Of course, there's smart people there. I'm not one of these people that just denigrates everything the government does. But central bankers don't have a market mechanism. They can freely, they're the only entity in the system that can print money in this way. It means literally willy-nilly, don't worry about anything else. You can just print. There's no reserve ratio that the central bank has. They don't have any They don't have any check or balance. They could just print. They can literally, with the stroke of a pen or the stroke of a keyboard for those balances with banks, they just print. So that's the difference. The difference is that M2 money, which is like bank money, those are savings deposits, checking accounts. Those banks have restrictions. Some are restrictions implied by the central bank. But even if the central bank didn't exist, and this is a key point of research from those like George Selgin, Larry White, I've interviewed them on my show multiple times in the past, so check out those podcast episodes. They're very good still, I think, and very timely regarding Bitcoin stuff. Even if you didn't have a central bank regulating your banking system, it would not make sense to just print money willy-nilly, because the precise reason is that other banks will see that you're issuing more paper tickets than you actually have assets to back it up. There's no magic number. So like some people, the hardcore Austrians, the Rothbardians, like to say that 100% reserves, 100% reserve ratio is what you need. So if I take deposits for you, I take your gold or even your fiat cash, I got to have 100% of it in the vault. That's the only way you can have a safe system. There's no evidence of that. That's never been a requirement in history. And most of the time in history, there's been well less than that. The best data that we have suggests that the reserve ratio is something like 30 to 40%. But in the most interesting free banking societies like Scotland, Sweden, Canada, where there was no central bank, the reserve ratio got down to even like 1 or 2%. And there was no panic. So that shows that, again, I'm not saying it has to be 1 or 2%. I'm just saying the market can determine what that is. And the reason that works is that if one person took a bunch of gold, but then lent 99% of that gold out and was lending it out on very bad credit, all right, lending it out to very bad customers, other competitors in the market would realize that and they would claim the gold. All right, through their normal course of trade, they would see, okay, you have a balance with this bank, this bank, this bank. There's so many balances with this bank, claims on this bank. I'm going to go call the gold from the bank, and I want the gold. And then the bank's not going to have the gold, and then the bank goes belly up. There's a famous case in Scotland in the 1700s. This happened. It was a bank called the Ayr Bank in Ayr, or is it Ayr? I think it's Ayr. My Scottish buddy would get mad at me right now that I forgot the pronunciation. It's Ayr. It's an Ayr, A-Y-R, Ayr, Scotland. And they had precisely that happen. They failed spectacularly. They put too many paper tickets out into the economy. There was no central bank governing any of this. There's just the other banks saw that there were way too many tickets of this bank. So we're going to take it and we're going to ask that bank to give us some gold. The bank didn't have the gold. And the bank went tits up, as they say. And that was even more hardcore because that bank and most banks at that time did not have D&O insurance, directors and officers liability insurance. It means that the directors, and this is hardcore free market, the directors and the officers of those banks became liable to the depositors, and they all went bankrupt themselves. So it shows you that risk, extraordinary risk that doesn't make sense in the marketplace, does not pay. That's the key lesson of free banking. And on the other hand, which is really what most people want, is most people want a babysitter. They want a government. They want a regulator. I'm not saying it's a good thing, but they want this sort of a money supply where population grows, people get upset, people get worried, and they want a babysitter. And more often than not, you get problems because of that babysitter. So that's, I think, the lesson of free banking. You have a question about, do they counterfeit money? Is printing a feature or a bug? Plenty of people counterfeit money, both in free systems and in non-free systems. It's a big crime. In the regulated systems, it's one of the biggest crimes you can have. You'll definitely guarantee yourself a spot in jail if you try to counterfeit dollars. George Selgin, who's another great monetary historian on this, has a great book called The Birmingham Button Makers. It's a real long title. I can't remember some of these simple things, but it talks about some of the history of the coinage in the UK during the Industrial Revolution, and you would get a lot of these innovations in money. Okay, milling the coins, putting a certain amount of groove on the side of a coin, that would help to detect a counterfeit. Of course, assaying the actual gold and silver, well, that can be costly. That detects a counterfeit. Little markings, specific things on the press, that detects a counterfeit. Of course, there are a lot of things that you can do. And now we have digital money. We have Bitcoin, which can detect a counterfeit, which is an unbelievable innovation, which is why those of us that understand free markets like Bitcoin. So for sure, gold, silver, all that stuff. I mean, it's interesting. It's nice. It holds value. Let me go back to our stock market chart. Let's look at gold and Bitcoin and the S&P. I think all is not going to make any sense. Yeah. Look, in a 5-year time span, just crushes it. But people think that this is like a fad or this has nothing to do with reality, when in fact it is, as Nick Szabo says, it's unforgeable costliness, right? So the cost to counterfeit a Bitcoin would be so, and when I say counterfeit, it would be a double spend, right? Or a miner who would spend so much resources to go back in time and change the blockchain and then have to get back to the present. And that would spend a lot of resources to get the chain back to the present on the malicious miner's chain. It's so expensive to do that in the Bitcoin world because we have this bridge from the digital to the physical that is mining with computer equipment with costly electricity. It's so expensive to do that, to change the ledger to your benefit, that people just don't change the ledger. They'd rather play by the rules. And that's the unbelievable innovation of Bitcoin that most people don't understand. It actually does have to go back to your question about money printing and counterfeiting, because that was always a big problem with gold. So that's why Peter Schiff and all this guys like that are still gold bugs in the face of all this stuff. They just have no clue about the true innovations of what Bitcoin is bringing to the world. And with stocks, I mean, people say, oh, Bitcoin is so volatile. It's so terrible. It's so awful as an asset because it's so volatile. I mean, look at this. All right, let's go back. Okay, yes, it can be bad in a month time span. All right, gold and stocks are down Bitcoin and stocks are down compared to gold. 3 months, even worse. But look at stocks. I mean, stocks aren't that great. You're down 15%. Obviously, we're in, blood murder days right now with the markets. You never know what's going to happen. So in this 3-month window, gold is looking better, and this gold is having the best tear ever. But if you go back a year, better than stocks, and go back 5 years, just destroy stocks and gold. So I don't buy at all these ideas that you need to be, again, this is never financial advice, but all this talk about diversification even into the markets, these are markets that are highly correlated to each other, right? So, I mean, is the metals market, like mining commodities, is that really that much different in performance than, retail consumer? I don't know, if you put all that together, you get the S&P. In 5 years, the S&P 500 went up 81%. Gold went up 77%. diversification here and there. Warren Buffett had this term, diversification. I think he's right. You got to be careful about what you diversify into. You could be diversifying your portfolio. So that's why Bitcoin is the ultimate stoic asset. You don't have mail. I mean, you can have mail-ox moments if you go back to a 3-month hold, and all you're doing is thinking about, what's going to happen and what Trump coin trader is going to snipe me from my, BTC calls that are a month out or something. Or you can just buy and hold. And this is a way better performance than anybody was saying. Like I said, 25 years ago, around the dot-com boom and bust, people were telling me that's when I started getting into gold. But even then, gold was not outperforming stocks. Let's go back. Gold and stocks. Oh, it's going to go back too far. But you'll still get the idea. This percentage goes back to the beginning of this chart, which is not what I want, but I can't do it any other way. I don't have a slider like my software, but if I started this at 2000 even, it's going to be better stocks than gold. Probably. 112 divided by, what is that? What would you say? That's like roughly 40. If you took the height of the bubble, if you took the nadir, it'd be even better. 2.8. I can't tell. Maybe gold actually could be better from a certain point in the height of the stock market. In any event, trying to do math on the fly without my charts here. They all are correlated quite a bit together compared with Bitcoin. A Bitcoin Beast asks about public Bitcoin miners. I do not have a view. I'll do that for the next video. Let me put them into a little list here, which I can do on TradingView, and I'll show it. But I don't have a view. It's getting competitive, and just like gold mining, it's very competitive. It's probably good. It's probably overall good. And this is, Michael Saylor has always talked about this a lot. And Michael Saylor has led the way with this idea. But the best thing about Bitcoin mining compared to something like gold mining is with Bitcoin mining, you're still long Bitcoin. And everybody knows it. Everybody knows that because of the trajectory of the market, this green line, which just way outperforms anything else, Bitcoin miners are going to be long the asset that they're mining. That's not true with gold. When you're a gold miner, all right, and you are mining gold, let's just show gold here over the last 5 years. Yeah, look at that. It's only 5 years. They need a 20-year here. It's annoying. Anyway, if you're mining gold here during this historic boom of gold in the last 5 years, going up to $3,000 an ounce, which still over 5 years amounts to 77%, which is insane that it's only that 7%, 10% a year, a little over 10% a year. But regardless, if you're only mining gold, you're short the asset. You're selling gold for dollars. You need to sell the gold to pay your miners, to pay your infrastructure, your licenses, your equipment. Now, of course, that is true with Bitcoin as well, but Bitcoin has a different circular economy where some people do accept the Bitcoin, which takes away some friction, but that's not a big deal. Of course, electricity is the biggest deal, and hardware cost is the biggest deal. And yeah, you could take away some friction there if you pay in Bitcoin, but most of the time it's going to be better to pay in fiat anyway because the Bitcoin is going to go up in value. So the whole trajectory of the market is geared toward the asset. It's geared towards going long the asset. So it's a good question, and I don't have a better answer than that for you. But gold just does not have that. Gold is so far from taking over the fiat system, and everybody knows it. Everybody knows it's not going to work. So you're short the asset. If you're, that's the odd thing about a gold miner is you're actually short the asset. You're, yeah, you believe that it's going to be enough to cover your cost, but you're going to sell it for dollars. You're going to sell the gold for dollars, and that's just not the case with Bitcoin miners. Yuri says about S&P being driven by hype stocks. I completely agree, which is why another reason why it's diversification here. It's yeah, it's going to go up. I mean, you're going to get a different amount of comfort here holding the S&P versus holding gold. Different levels of comfort. First of all, this just shows me why I'd be a nightmare to be a swing trader. I mean, if you think that you're going to buy here and this is going to go up a little bit more, and then you have to sell here because you got liquidated, it's just madness. Bitcoin is the stoic asset. And the thing about Bitcoin is it is dominating the exponential curve. Okay, so remember, the purple line is exponential. The green line is power. But the green line is a function of the purple. It's the market cap divided by the purple, and it still is a power curve. That shows you, again, I know I've said it 1,000 times, this shows you that Bitcoin, the Bitcoin growth trend dominates. And what is the Bitcoin growth trend? It's a power curve. And it's a beautiful looking power curve. So 100% of, according to this trend, there's many ways to do this projection. That's my caveat. According to this trend, you get to 100% of the global monetary base by around 2 halvings from now. What is the projection of the global monetary base around that same time? Doing an exponential curve, it's going to be something like 80 trillion. I don't remember off the top of my head, but something like 80 trillion. He's definitely not my competitor. Although it is funny that Plan B came out with his Median article, which was in conjunction with Saifedean's stock to flow stuff after myself and Giovanni came out with the power curve estimations. But I'm a bad marketer. That's all I can say. If you want, please donate to my BTC Pay server on my website. It's very easy. You can donate Lightning or on-chain, but what can I say? I'm a bad marketer. Stock to flow is it's a power curve. Stock to flow is a power curve. It's kind of a ham-fisted way of getting to this beautiful chart. I gotta go, guys, but I will. Let me see if I can do one more stock to flow for you. Let's do this one. Since you asked, you can use just custodial Lightning wallets. I mean, it'd be blasphemous for me to say that, but you said you never did a Lightning transaction. You can use, God, what is the wallet of Satoshi? I mean, there are plenty of, that is like small amounts. You could get rugged. I'm not saying keep your money there, but you can easily use. Shoot, this one isn't set up. Let me see if this one works. Sometimes the charts get reset and they don't load, and I got to go back into the source file, which I can't do live recording. But yeah, if you want to try Lightning, my advice, just use a custodial Lightning like wallet of Satoshi. Again, that's blasphemous. People would want you to use Lightning connected to your own node and keep your liquidity high and do all that stuff. But there are services that do that for you very easily on your phone now. Yes, you put a little bit of trust in them, but you put trust in your bank. So just don't put more than $50 or whatever on a Lightning in a Lightning wallet, and it'll be just as easy for you. But yeah, definitely on chain, much better, much more base money like for Bitcoin. This is still loading. Let it load. There's our tariffs. Now my AI says 50%. Before it was saying it could be over 10%, but yeah, we'll see. Is this loaded? It did load. Good. Okay. So here's the brass tacks. This still isn't good enough. I should have. I gotta show a different one. So here's power versus exponential again. Exponential is a straight line. Power is a slow asymptote. All right, slower than a logarithmic, which would be way quicker here, like explosive, and then flatten out. So this is a nice gradual power curve. This is how like networks grow, cities grow this way, and we can see just looking through the pricing data that the exponential doesn't fit nearly as well. Look at how nice that power curve fits. The price goes up above it, down, up above it, down, up above it, down. This is mathematics. This is nothing, it's not a trading view thing. Whereas I drew an exponential R squared. This is market cap, by the way. Market cap is only 85% on the exponential, because look where the exponential line is, the dotted line, the straight line, exponential trend. You're only going to intercept price a couple times. You're way under it here. And now it hasn't even hit it since 2022. That's not a well-fitting curve. Bitcoin is not exponential growth. If you hear someone tell you Bitcoin grows exponentially, they're just spouting off the top of their head and they don't understand the underlying math. An exponential growth would be if I put this straight line on the gold price or the S&P 500 price and put it on log scale. Then you would actually see, I need to do this again, I'll do this in future videos. Then you would see that this is exponential growth. Do you think 109, 110K BTC may have marked the top for this cycle? I don't think so, no. Because according to my theory, which is not only mine, I think to some extent Giovanni and all these guys, Plan C, Cena, they have the same. What you see here is adoption. Okay, so again, exponential is just insane. We're not going to look at the price, by the way. If Bitcoin were exponential, go out to 2030, we'd have $1 million billion market cap. Power would project a $14 trillion by 2030, okay? 15 trillion by 2030. That's power. The exponential projects $1.5 billion. So that's let me get it. It's $1.5 quadrillion, way more than any market. It's just not realistic. It's not going to happen. That's not how the markets grow. That's not even how much anything is valued today. It's the wrong model. That's the point. And stock to flow, when you put it together, is sort of a combination. This is a good stock to flow. Plan B's used gold and silver, which are exponential assets still. Again, we don't have to run all through this analysis, but this will always come down. This is based on all-time data. You can see it doesn't look good here. It's way off. This is one version of stock to flow. It's unnecessarily complicated. And if I would, let's take off the exponential. If I would do stock to flow back like 5 years ago and stop it based on the data, you'd be even more skewed. Whereas if I stopped the power curve data feed and started putting the power curve data feed through this, just projected it out, the power curve would be more accurate. I got to do some more charts on that where I show you like the 2016 stock to flow versus the 2016 power curve, and you'll see that the power curve is a more accurate projection of Bitcoin. So that's about the stock to flow again. Yep, thanks, Gio. And as far as Bitcoin Beast, again, your question about the 100K top. First of all, that 100K top was here. All right. This is market cap, I know, but here's the power curve. just right on trend. All right, now we're down again, I understand. But most of the time, we blow through it way above. And now we're sort of kissing it. And I don't see it, that this is the top. Another reason would be going back to the monetary base. I really got to have these. This one, which we just looked at. Going back to this chart, which was my chart of the day here, we're right on trend. All right, and if you look at so what I am talking, what you're talking about with a recession, and I'm talking about a recession too. I'm visualizing that as part of the monetary base, which is the purple. Okay, so let's clean it all up. This will be the last point of the video. All right, so this is what I'm calling a recession. Money is down. What happens when money is down? They print more because they don't know what else to do. That's just what they do. They print more. Monetary authorities, central banks, are independent of politicians, although they will always do what the politicians want. Politicians want them to print more. Trump certainly wants more money printed. He wants lower interest rates. So this is going to go back up. It's hard for me to believe that this goes back up and Bitcoin doesn't also go up. So if I put the percentage of it, all right, and then we put the trend line of that percentage, zoomed in, I think it's confusing even to show the purple line now, but again, the green line is just a percentage of Bitcoin's market cap divided by that purple line. We're right on trend, right on trend. And if you put the two sigmas, we're just nowhere close to it. You know, back down to the FTX bankruptcy, we were close to hitting the trend, but I don't see that happening here. I think we're on the upswing. I think at least one sigma up, which actually is lower than I thought. I need to look at that, but I think here's another way of looking at it. By 2025, the power trend itself is 10%. I think that's a good metric, a good metric for the top. Remember, in 2021, actually, it doesn't even compare to the past because it was 1.5%. It's very small. But if it goes to 10% as the blow-off top number, that means $2.5 trillion market cap. So that's at least 500, now more, $700 billion market cap, more than we currently are. So figure out the price from there. And I think it could easily be $3 trillion market cap at the next top. To me, that's just how I see it. Yeah. Do you have expectation for a longer cycle topping? And yeah, I think that's possible. I think that is possible here. Not only because of the geopolitical turmoil that we are breaking the 4-year cycle, but the trend following has been much more gradual this time. Okay, whereas before, you know, we'd be under it, and then shoot above it. All right, if you go back to 2017, we're well under it for a long time. Let me take these off. The green line was well under the black line for a long time, then shot above it for 2017. Same thing happened in 2013. But now we're in a very sort of, I just see this as a more gradual upswing. But what I do not see, some people like to say that, oh, this is going to be just a gradual, it could be even that the cycles are over. We're just kind of gradually, even some power trend people are suggesting that maybe it's going to follow that trend. I do not see that. Markets don't do that. No, I just don't see markets do that. Markets like to overreact. They like to go crazy. They like to do this. Multiples blow themselves out of the water. It just doesn't happen that a good market sort of continues on, on trend, right? So that's why I think it's great to use these bands as a guideline of when to exit and when to enter. But I just do not see a sort of nice, steady, on-trend growth. That's just not what markets do, and certainly not with these guys in the White House. I mean, they could fart and the markets would go up tomorrow, and it's just crazy, crazy days politically. But especially because of the crazy political days, I don't see why Bitcoin would just do this nice gradual uptrend on top of their strategic Bitcoin reserve and all the rest. Gio asks, now that we have ETFs and other institutional investors, won't the price of Bitcoin start to behave like stocks and other assets? I think no. Again, the trend is here. This dominates. Stocks and other assets are exponential, remember. I need to do a dedicated chart so I can show you currencies, stocks, bonds, how they all look. They're all exponential. They're all straight lines on log scale. This is not a straight line on log scale. This dominates. The power curve dominates on log scale. That's the difference of Bitcoin. That's the beauty. That's really the beauty of Bitcoin. That's where I think it's the ultimate cheat code, to use a Peter McCormick term. It's a strong R squared, it's a strong trend line, and it's a power trend. It's different. It's first of all, it's faster, but it also dominates. When you make the comparisons, when you go apples to apples, that is on log scale, divide one by the other, whatever, divide Bitcoin market cap by the monetary base, you continue to get the power curve. So I just do not see it. I think that what you have is, even though you have all the narratives, you have strategic Bitcoin reserve, you have sovereign wealth fund, you have ETFs, you have hundreds of billions of dollars of new investments, you have mom and pop starting to understand it. You still have billions of people that never use Bitcoin. This is a network. It's going to grow, and it's going to grow according to an adoption curve. And that adoption curve does not look like hyper Bitcoinization. It does not look like an exponential stock or bond or gold. It looks like this. And the key that I'm trying to say is the power curve dominates. It dominates the transaction. It dominates the relationship. So I just, when you see this curve, think adoption. And this curve dominates. Yeah. That's true and not true. BTC for Plebes talks about ETFs need to show true proof of reserves. Otherwise, they're just trading paper Bitcoin. That's true also for gold, though. People still trade the gold. There's like hundreds of billions of dollars of paper trading on top of the ETFs. Like the gold is not all there, but if you look at the open interest, it's way higher. It just happens. And it's not only in that market. That's another thing. It goes back to the free banking idea. Markets can print money. First of all, like Keynes said, more than you can stay solvent, and they can print money better than the government. So think about penny stocks, mining futures, corporate paper on SME markets. The market comes up with a lot of clever ways to trade the underlying asset, and that the net effect is it's printing money. Look at Saylor himself. I mean, the BTC yield is just it's just taking free money and buying more Bitcoin, and somehow the market rewards him with a higher multiple over Bitcoin. He's printing money. Michael Saylor is a money printer, and he is a good one. He's a good salesman. He gets investment from legacy TradFi Wall Street folks. He gets money from mainstream pension fund Walmart folks, and he gets money from new school Bitcoin bros. He gets money from everybody. Michael Saylor is one of the best money printers in the world. All he's doing is taking cheap commercial paper, offering convertible notes on his stock, and buying Bitcoin with it. He's just doing some financial engineering. So yeah, that's keep that in mind. Keep that in mind. I think There's nothing wrong with it. I'm not saying it's like, don't moralize reality. Don't moralize the markets. That's the problem with a lot of these. Whatever. I don't really have a problem with them because I'm not friends with a lot of them, but the hardcore, hard money Austrians that sort of just say that it has to be this, it has to be 100% reserves, it has to be this, Texas Bitcoin law, all those things. That's not reality. The reality is people are going to want a little bit more gambling, a little bit more interest, a little bit more risk, and a little bit less safety. That's what they do. Can markets overheat? Absolutely. Do you want to have a safe play like Bitcoin in the case of that happening? Absolutely. How did the Asian stocks finish? I'm not sure this is going to show up correctly on the day. We'll test my trading view here. Is that let's take off the Nifty. This is, I guess, real. I mean, today. So, Hang Seng was slightly down, Nikkei slightly up, and Shanghai had a nice bump, 1% up. But that's from being pretty. Well, let's go to a month. I wish they had like a 5-day too here. Still quite down over the month. Asian stocks. Yes, they are playing with fire. BTC for plebes. I'm not sure what you mean, Gio, about his version of belief, but if you're talking about Michael Saylor, at some point that yield will converge to 1. So now he makes money. His share goes up in excess. MicroStrategy shares goes up in excess of the Bitcoin price. Eventually that will converge to 1. There will be no benefit, but not the case right now. Whether it's regulations, uncertainty, nobody knows how to hold Bitcoin. They think MicroStrategy can do it better than them. He's a good money printer. But that's it. That's all that it is. And, it's fine. Do it. Go for it. Go crazy. But it's a blessing that we have Bitcoin during times like this, I would say. Even though, it's above all my Asian markets of the month. 3 months, not so much. A year, you got to go back to 5 years. So, yeah. It might take a year to 2 years to blow out ahead of the rest of these exponential curves. But the power curve of Bitcoin is way, way more strong. All right, guys. I'll talk to you tomorrow. Yuri, I'll talk to you tomorrow as well. We'll do a Ukraine update. Maybe talk about the markets as well. Thank you, guys. Have a good Tuesday.